That falls apart in the event that the Federal Reserve significantly cuts the interest rate on the currency. If the Federal Reserve significantly lowers interest rates, it will send a message to savers and investors throughout the world that the American people do not value the value of the dollar. Afterwards, we will proceed with the race. Definitely, unquestionably, positively. Just so you know, I believe we're in for a bull market that will last for quite a while. My 50 years of experience have led me to the conclusion that precious metals are a good investment. I should qualify it by saying that the current market is focused on precious metals rather than broader resources. Investors worried about the depreciation of their fiat-denominated savings products tend to put their money into precious metals. Without a shadow of a doubt, the world's leading savings product, the US dollar 10-year Treasury, is facing very serious challenges. In my humble opinion, the buying power of one US dollar drops by 75% over the course of a decade. I should clarify that I am not referring to the relative worth here. I am not referring about the value of the dollar in relation to the euro or the pound. The absolute value of the dollar will probably fall by 75% over the next decade due to the national debt and deficits in the United States. I'm stating that. Kai, I lived through a similar phenomenon in the 1970s, when the value of the dollar dropped by 75% from 1970 to 1980. Gold's price increased 30-fold in that same decade, and it is not a coincidence. I am not implying that the price of gold will increase 30-fold from this point forward. By 2025, it will have increased 12-fold from 2000 levels. However, I do believe, though not with absolute certainty, that the nominal price of gold rises to an extent that mirrors the depreciation of the US dollar. The nominal price of gold may easily triple or double in the next decade if that mathematical symmetry remains. At the same time, the price of gold has risen significantly from 2022 to 2025, and starting in 2024, we noticed that the price of gold was rising faster than the cost of producing it. As a result, free cash flows have skyrocketed for the largest and most successful gold miners, rather than increasing. Now that free cash flow has increased and the gold market narrative has begun to appreciate, we can officially say that there is a bull market in gold. It's behaving similarly to previous markets. Gold was at the head of the market. It shifted thereafter as the margins widened. When I say leadership, I mean it as a transition from a position of weakness to one of unparalleled strength. From the top down, it's dripping quickly, even to the lower echelons. It should be mentioned that the values for the top 15% of gold miners and explorers, based on their net present value at the current gold price, are reasonable. The CEO of Agnico Eagle, Ammar Al-Jundi, was my interviewee at the Boca Raton conference. We argued that even though Agnico Eagle's price has doubled in the past 18 months, the ratio of the cash margins it delivers at 3,400 gold to those it delivered at 2,200 gold 18 months ago shows that the company is actually cheaper now, after doubling, than it was 18 months ago, when its price was half as high. Everyone must realize that worth is subjective. Furthermore, that comprehension is crucial. Concurrent with keeping in mind that value is relative, keep in mind my prior warning. 80 to 85% of stocks are worthless, so there's really no use in giving them any kind of value. The robustness of the best-in-class junior mining financings surprises me. Over the past 18 months, I've become somewhat of a celebrity investor. Issuers have informed me that my inclusion on the roster serves as its own form of advertising, so I'd say it's only fair to treat someone like me properly. Whether it's good times or terrible, I've written checks. This is not meant to be an advertisement for Rick Rule. Rather, I would like to draw attention to the fact that during the past 18 months, I have been cut from most of the large-scale financings that I had hoped to be a part of. Despite the industry's allegations of underfunding, top-tier businesses are in fact well-funded. We've witnessed juniors raising $30 million, halting soft circling at $50 million, increasing the offering size to $40 million, and then selling all their oversubscribed shares. There is no shortage of capital for worthy businesses in this industry. This market is different. However, as is typical at the start of any gold bull market, the valuations here are all over the place. The largest and most powerful have moved ahead of the pack, as is their right and their destiny. During a bull market, disparities in company valuations between the biggest, best, and most liquid companies become more apparent. Companies with large market caps will eventually supplant smaller ones, or valuation arbitrageurs like me will start allocating below the space's average value in search of absolute or relative values. The cost of capital provides a long-term edge over competitors. Starting with gold, the hierarchy goes as follows. The best of the best, then the best of the rest, down to marginal producers who generate more leverage, up to the riskier single asset producers, then to high-quality developers, and finally to high-quality explorers. Down the quality chain, the money flows like a waterfall. This one too is behaving in a predictable manner. Something seems to be happening, maybe as a result of social media, who knows. But now the money is trickling down the quality chain at a far faster rate than before. Despite our expectations that funding would flow to project developers, we are witnessing an unusually robust financing market across all explorers, regardless of quality. In contrast to the last 4 or 3 precious metals bull markets that I have witnessed in my professional life, this one is behaving in a really irrational manner. Only a small fraction of grassroots explorers, those I am actively seeking to invest in, will I be able to speak with. Fundraising has been a resounding success for the prospect generators, the places where I want to focus my grassroots exploration efforts. There has been a consistent pattern of success in the fundraising efforts of the grassroots explorers who have assembled renowned high-quality teams. Businesses that possess the third dimension, i.e., high-quality drill holes that validate surface data, have been successful in raising capital. However, it seems like more and more people who are unable to walk, run, or see are also able to raise money if they have access to a compelling story. In the US, for instance, there is a great deal of optimism regarding the resumption of exploration and production within the country, thanks to a shift in the regulatory landscape and the government's bizarre decision to subsidize mining rather than prohibit it. You see, right now, the usual global con artist peddling fiction instead of facts is buying up a swath of land in the American West, laying claim to it as a potential resource for rare earth elements, gold, uranium, titanium, vanadium, or whatever is trendy at the moment, and claiming that their pre-money valuation is only $3.5 billion, when in fact they're worth zero. A lot of money is going to those guys. Actually, that's not too difficult, considering that there are likely 500 mineral exploration or mining businesses globally. It would be impossible for me to keep up with them all, so getting to places I'm not isn't a huge challenge. Well, I'll share with you the junior methods that I really like. My preferred junior methodology, and I know most of your subscribers won't be brave enough to follow it, is to identify a seasoned team operating in an unpopular commodity with solid evidence that they aim for Tier 1, with in situ recoverable reserves and resources valued at $10 to $20 billion at today's commodity prices. Both the product and the space are likely to be out of favor when that occurs. Whenever I'm lucky enough to witness all of those things in one package, especially in cases when it's deemed unpopular enough to have a market cap of less than $100 million, it gives me hope that I can experience a 20-bagger in the next 5 or 6 years. That is way too good for me to pass up. That is just too good for me to pass up. To my relief, the vast majority of your subscribers are capable of, intend to resist, and actually do so. Everyone wants a steamy tail. They would rather have something moving than sit around and wait 5 or 6 years for payment. Finding something with the kind of warts I like is the simplest way to go ahead of me. Mundane, unpopular nation, unpopular product. Having said that, I'm not sure you can outguess me on this one, but I think it's safe to say that you can keep buying gold optionality stories for the time being, especially those about inefficient producers that stand to gain from the current gold price. When it comes to mid-cap copper companies, I believe you can achieve the same results. I'll tell you why right now. Building new production capacity. What is now a $1 billion gold mine becomes a $2.5 billion gold mine if the purchase power of the US currency decreases by 75% over the next decade, as I expect. Also, the value of today's assets will increase in price if they are replaced. Predicting the future price of gold, or investing in a development or advanced exploration, play with the expectation of a return 4 years from now, will result in a loss of 4 years' worth of net present value at growing margins. Since I have always preferred to invest in firms located in the top 25% of the cost curve, my portfolio is vulnerable when it comes to gold companies with all-in sustaining costs in the lower half. If one is prepared to put in the analytical work, they can find companies like OceanaGold that are significantly undervalued at a gold price of $3,200. These companies are already producing and will generate free cash margins of 14% or 15%. They also have decent balance sheets and production is happening. That's the sector of the market where I do not participate. You have me beat in that segment of the market. Quite intriguing. Thank you for providing an example that we can use to ground our thinking and calculations. Are there any more deals to be found in this market outside the optionality plays? In a word, yes. I believe EMX royalty will be one that we showcase at your conference. Based on my analysis of EMX, I estimate that the total value of all the components, if sold at auction, would be twice the market cap. I find the prospect of being a part of a precious metals bull market with a company that can outperform the market while offering products at a 50% discount to replacement cost truly appealing. Keep in mind that the majority of businesses in our universe, Kai, are in the process of aggressively pursuing funding. For your money, they are selling their shares. It seems like they value your money more than their shares. In contrast, EMX Royalties is acquiring shares with the substantial free cash flow it generates. That is to say, they value their shares higher than your investment. Which would you rather invest in? A company whose leaders believe your money is more valuable than theirs, or one whose leaders believe the opposite? This requires no special expertise. Altius is another firm I'd recommend. They have an excellent royalty portfolio and an excellent asset allocation team. They decided that buying back shares, rather than issuing new ones, would increase their per-share prices. According to my buddy Doug Casey, dividends and buybacks are outward manifestations of inward grace that return cash to shareholders. That quote has grown on me. I would suggest that the anti-US dollar trade is quite crowded in the very near future. Dollar is probably oversold in my opinion. A dead person's EKG is the best way to describe the volatility index, or VIX. The market is relatively calm. In an otherwise calm market, the US dollar is the only asset class that appears to be causing concern. One may argue that the bear case for the US currency is overbought in the very near future. If the Federal Reserve significantly cuts the interest rate on the US dollar, that falls apart. The world's savers and investors will see the Federal Reserve's interest rate manipulation as a sign that American society does not value the dollar's integrity.